Well, Dinesh's financial planning is something that we'll talk about later in the show, but as we pointed out right now that the main focus area at this point in time is about addressing your grievances. What is, if you say, the first step when a consumer has or seeks certain answers from the company? What is the first step forward?
The consumer can approach the office from which he has been issued the policy, outlet, office. Sometimes the advisor keeps in touch. That is the ideal situation. If the advisor is in touch, he will be explaining in the consumer's language because he knows the consumer personally. And he has an interest in the consumer because for further insurance and for further growth, in his portfolio, this consumer's interest is vital for the advisor. And in case the advisor is not contactable, sometimes these advisors go out of the books of the company because of other regulations. In that case, he has to approach the office which sold the policy. And many times that may also not be possible. In such a scenario, he can contact the portal or the website of the company where there is a site for registering the grievances. And there they will be replying. And in fact, most of the companies reply within a matter of 7 days, and it is a very well monitored complaint tracking system.
Perhaps in the case of Dinesh Gandhi, where he has some issue about the investment that he has made. In this situation, how does a company get into face-to-face with the consumer? What is the process that it takes?
If he has registered a complaint online, the company will give the reply online itself. And if they ask for a specific advisor, as far as LIC is there, we have specific advisors to go and talk to them. And there are grievance redressal officers for all the companies. And that particular officer can interact with them, and going to the doorstep depend on the particular need. In case the need is quite, pressing, they will go to the doorstep. In a professional setup, usually you can get the answers online, or you can get the answers over the telephone. There are toll-free numbers which contact. There are the call centers which respond elaborately. The call center executives do respond elaborately on the various queries. And that is a system that they have. Here he needs a counseling, financial counseling, where he addresses his queries and get the doubts cleared. That will be always advisable for him to. There are interactive websites, and especially the customer relations management websites allow the customers to post their queries and they interact with that. And that will be the best method for him.
But what happens if in the first go that problem is not resolved? What is the next step within the company that the consumer can look at doing?
If you go to the toll-free number and the grievance is not resolved, then they can contact the customer grievance redressal officer. And their addresses, etc., again will be, usually now that everything is on the portals and website, it will be displayed.
It will be displayed.
The telephone numbers are also displayed. The call centers also respond to them. And this is the best method. Okay. If that also fails, then the next level. For example, there will be a hierarchy of customer grievance redressals. And the next hierarchy is the regional office or the divisional office, what we call an LIC. And finally, we have the customer relations management at the central office. And these officers do respond. And in case of...
in case the customer is not satisfied, that's when he goes to an ombudsman, which is a legal procedure more to say.
Then he can go to the ombudsman. He can also complain to IRDA, the Insurance Regulatory and Development Authority. If the complaint is material, for example, there is a claim which he is entitled to and it is not settled, and he feels there is, he is entitled to it and legally it should be his, it is not settled. Before going to the court, he can complain to the IRDA, ombudsman, and these forums.
How does the process works when it goes to the IRDA? The IRDA gets a complaint from a consumer. IRDA puts the question forth to any company to respond, and that's when the decision. Then the decision lies with the regulator.
If a customer puts a complaint to the IRDA, IRDA forwards their complaint to the company and keeps monitoring whether the company responded or not. So the customer can get back to IRDA if he did not get a reply.
Now coming to Dinesh, financial planning. Firstly, let's try to clear his doubt about his ULIP. So what is the advice that you would like to give it to him?
In ULIPs, what is very important is what is the type of fund he has chosen. And that is all in the fine print. The various conditions are in the fine print. Now there are three or four types of funds.
Firstly, there is no surety. Assured returns are not really possible.
If you go in for the what you call secured fund, more or less the returns are assured.
Okay.
He must have taken, because he was planning for a growth of 10 to 15%. He must have gone for an equity fund. And you know, equity, the markets have come down during the last 4 or 5 years. There has been a change. In fact, if he had entered the market probably at the highest 4 or 5 years back, if I remember correctly, somewhere around 7,000 it was, and today it is, the lowest is 9,000 last year. That particular, around roughly hovering around 6, 7. So at that point of time, he had got the NAV and seen that then the corpus, the principal has eroded. But ULIP is basically a long-term investment. So one has to wait at least for a cycle. It is advisable for them to wait for a proper cycle, and there is always a facility for them to switch over the funds when the funds are not performing well. When the NAV is coming down, he has a option to switch from the aggressive equity linked fund to a more secure fund or to a balanced fund. Usually a person of an age 44 does not take all 100% equity unless he is very sure that he is ready to even face the downturn. The advice, he might not have fully followed the various aspects of the ULIP. That might be the reason. Without knowing the full details, I will not be in a position to exactly comment on that. Then there is one more aspect. There is something called front loading charges. In certain companies, they have a high percentage of front loading charges because that covers the life mortality cover. Age 44, the mortality factor will be very high. The mortality loading will be slightly high compared to the younger ages, because 44 is a very high risk age. So those premiums are recovered by certain companies in the first 2-3 years. So the front loading charges come to around 40%. But from his narration, I have found that he probably was never communicated, that is the number of units. He might not have looked into the number of units that was allocated to him.
Now coming back to his other investment, clearly from what I understand, he has a ULIP policy which is of 2 lakh rupees. He has an endowment policy for about 2 lakh insurance cover, much lesser than what his idle cover should be, because he earns about 7.2 lakh is what he's mentioned, and a 4 lakh cover is clearly highly underinsured.
True. Actually, the ideal insurance cover one should be having is almost 17 times to 20 times of his annual income. There is a concept called human life value, which says that, of course, the person can never be replaced, but the income has to be replaced. This particular concept entails that whatever earning he has been earning so far, money he has been earning so far, has to be replaced by the amount that he gets at the time of when he reinvests the insurance sum assured, or the amount he gets from the life insurance company. And term insurances will be a little costly at his age, but still it is worth trying, because his children are very small and the responsibilities are still high for him.
Okay, we'll take a short break here, but we will continue our discussion on grievance redressal mechanism on the other side of this break.